Okay, so we are starting the live streaming for the London Open. Today is Tuesday, the 6th of December 2022. So we are looking to get long on the Euro USD due to the several close we have seen lately. We can just refresh memories if that would be necessary. So we have seen the first weekly close, not last week, but the week before, on the November end, above all the important fib. At that time, there was the 1140 fib that was the high in place. So it was suggesting we would break it, and that's exactly what happened. We have new high in place for since the bounce here, 1,000 pips lower. And the other close we have had last week, which is very important, we are still like we were this week, previous week, above the 161.8 and 61.8 fib. The 161.8 was calling for the 200%. That's what we said. We took that 200%. And the close above the 38.2 fib was calling for the 23.60 fib, and that's what happened. We took it too. So everything is unfolding as it should. Concerning the close above the 61.8, so it's calling for 108, which is our next target on the upside. And we have on the way the 227 extension here of that ABC up at 106.90 area. So we have 100 pips here. So that would be, let's say, from actual level, the target is about 300 pips up. That's the first part. And then we would go, as soon as we would close above this one, then we would be looking for 102.12. So my targets, as I said, is to be in between those two things before the end of the year. So between 108 and 112, that's what I've been saying since August, if I'm not wrong. For now, if we look a little bit intraday, we have that small ABC, inside ABC. It's a 15-minute ABC that I took on after the NFP thing. You remember we went down, then we bounced. We have some level here on the other chart, but this chart is a little bit cleaner, so that's why I put it first. And we have been using it quite nicely till now, so I'm still keeping an eye on it. And this morning we went mostly to the 1140 fib, which is the retracement of the complete move up. Just to make it clear, so the 1140 fib I'm speaking is the complete retracement of that move up from the bottom, the 1,000 pips move up we had. So this one will be the first stop we could expect to see on the Euro USD, and that's mostly what we did this morning, together with the 38.2 fib of that ABC up. So we went to the 272 extension here, the 23.60 of that big ABC down that has been controlling the price very nicely on the downside. And now we are unfolding it on the upside and coming back step by step, because each of those levels have created some support resistances on the way down, some support on the way down, and now they are resistances on the way up. So that's what we have. I've been scaling in the morning. I took along here yesterday night that paid 35 pips. Then there was a short here. I didn't took it. I was a little bit, I was sleeping. I was not a little bit late. I was just sleeping at this time, right on the 100% extension. This is what gave us this tailwind, this bearish tailwind for the first part of the morning, which is what I said in the trading room, that we would have some bearish trend tailwind inside the pre-open, which is now, and that's what happened. So since that, I went long, like some in the chat room. Why? Because we are looking for the next level at 108, and we are looking for a break of this level, which could happen anytime. seeing the impulsive move that Euro-USD has developed in the past days and weeks. So that's something that can happen anytime, and we would see at that moment, we would see like a big impulsive move, another leg up, which could be a little bit shallower than the previous one for one reason, which is, let me show that on a new chart. So the reason why is that we will need at certain time, we will need a pause. And this pause will have to be, if we look at that on this perspective, or even on the daily perspective, which can be a little bit better, but you see we have had several impulsive moves like this one, then we came back, we have another impulsive, we came back, another impulsive, we are coming back now, or continuing to that impulsive move. But at a certain time, we should unfold. If we look at that just simply like the last swing up here, you take the ABC there, and it's very simple. You get your. I'm not sure the B is well done. Okay, so if we get the this now, you see the 61.8 is there. So we have to go there first. And then when that will be done, we can see perhaps a bigger pullback, but we will have to go there first at 106.80 for something like that. And if we look on the other chart that we have here, we are looking there for 106. And then if we would look at the 106.84 or something like this, you see it's this big confluence area where we have year to date, Q block 2, 227 extension of the ABC up, some volume, and we have at the same place some monthly support pivots. So that would be really aligning with what we look for. So this is what we are looking as soon as we will break back above this 38.2. I don't know if we did it already or not, but we will try to do that this morning. So you see, we are unfolding that. We stop right to the pip on the 50%, and now we will go for the 61.8, and then we will go for the 100% at 109.70. And what do we have here? The 78.60, 76.40 is right our blue target on the fib that I mentioned earlier, which is here, not here, there, the 108 level. So everything is aligned there, if we look at that simply. And the other way to look at this was, or is, taking it from the bottom, you take that ABC from here, which gives you some longer-term targets, not longer-term, but deeper, starting from a deeper bottom, sorry. So if you do that, if you do it like this, which is not wrong, but it's less precise on the actual time. So if we do this one and take off the other one, sorry, we take off the other one, you see on this one, we do the same. We are using it quite nicely here. We are bottoming on it, which is the new B of that ABC. So it's important to keep both of them. Sometimes it's a little bit tricky because we need to look at two things at the same time, but that's how it works, and that's how we get the best insight and the best confluences or support resistances that we like to have, because that's how we do our best trades. Okay, so here it's in two colors, but you see that last one is really very, very nicely stopping the price here. We had the 200%, we went a little bit through it and stopped there, which was at the same time, if we look back here, which was at the same time a Q block. So it's very important for us. It's some volume resistances and then support resistances. And then we have the YTD, the year to date here, which should provide in that area up to 106.09, 106.10. We should see when we would come back here a little bit of pullback before breaking up. Okay, so that's clear. So now we go back to this fib here. You see where we are. So we have other thing when we look on the deeper, zooming in really here with a very small ABC up. That's how it works always in trading. Multi-time frame analysis is the key of success. Without that, you can do nothing, whatever tools you use. So this is interesting because you see we have been using them very well. The 11% is here. We are, sorry, we are going to break up on the open. That's what I think. That's why I went long since the early morning here. I've been long all the time. When it was going up, I was bouncing some, reloading, bouncing, reloading, bouncing, reloading, and so on. That way, I have accumulated position right on the bottom, and each time I was making a few pips, 8 pips, 10 pips, or whatever. So it's always good to take, especially before the open, which is in now 5 minutes, 5 minutes. So that's what I wanted to look at. You see the 38.2 here. We can put the value, the prices, the values. So it's at 105.82. That's what we have here. And that's that's mostly in this area we have here where we have it. I can put it there if you want. That can be interesting to add it there, even if that will make a lot. So you see the 38.2% that we need to break is there, and we have the 100% of the other small one there. So that's what we will do. We went shy from it here. We just stopped a few pips under it. Perhaps I could draw it a little bit better. Where is this one? Yes, we could probably make it a little bit better because it's not perfectly done, especially here. We see we have some room. Okay, so I can look it there. And basically that's what we have. So we start to see a nice move on the upside, which is what we have been expecting. I show that this morning a little bit earlier, so it's interesting to look at it. It's my chart where I have my tools with indicators and things like that. So here it's interesting because this is the heat map. Inside each of them there is 4 oscillators mixed, and it's a multi-time frame. So here you see basically 4 oscillators on 4 different time frames. So yesterday we were here and we had a strong bearish setup that was confirmed on the 4-hour, 1 hour, and everything, and that's why we had this pullback. This morning it was very different because we still have this construction of a short setup on the daily, even on the weekly, but I don't have it here. I can put only 4 of them, but you can see it even on the weekly. Let me show you. This is the weekly. You see the weekly is starting to get built. It was long, but now it's starting to turn short. So that means it will help a pullback sooner or later, but that can last, as I say, till the first week of January. So because I expect this upside move to last at least till the 8th or 10th of January. So that was lighter on the short side. And then you see the 4-hour and the 1 hour had turned bullish together with a 15-minute, and that's why I went long, because that was telling us we had some room on the upside for the morning start. Okay, so let me take this off now. I banked some, we'll bank some here, but we should go higher anyway. Oops. Okay. Great. So 6.8. So I still have a good size from this bottom. I expect we could break it, and we could then break this 38.2, and then we would be looking for the, if we break the 38.2, then we would be looking again for that one. I should change the color because here it's confusing. Let me put it in blue. Okay, So you see, when we will break back above that one, then we will look for the 50%, which was mostly where we stopped together with the 2360. Same thing. I was expecting a potential touch of this area this morning, which can still happen. We have the London Open in 1 minute now. So if we see a pullback inside the London Open, we could very well bounce from this area, and that's what we will see very soon. If you have any question in the trading room, let me know. And if not, then we just wait. We have the London Open now in 30 seconds, 25 seconds. So you see, we went right to the 78.60 fib here. We pull back from there. That's where we banked some of the long we had there. Some people in the chat room did the same, so they banked 20 pips from there, which is what we did this morning. So you see, we have 20 pips here. And now we wait to see the follow through in, well, we have the London Open right now. So we'll see if we get the follow through. We have to wait for the L+5 as usually for the next 5-10 minutes to see what's happening, if we look lower or not, and if we respect actual lows. So that's what we do every day. As soon as we respect those lows inside the next 5-10 minutes, then we usually often, in many cases, we see a continuation of the first initial move, like this one in that case. And that's what we are going to look at now. We need to see if we break that 61.8 extension, that 61.8 fib, and at the same time, we can look here where we are. So you see, we went up to this 4-hour 2021 moving average, which we need to break that area to see the continuation of that move on the upside. That's what we need to do. And we stopped right here on that yearly pivot. It's a very important yearly pivot. That's why too I was accumulating some long here, looking for a potential deep up to deep. It's not very deep, it's only a few pips, but looking for this pink area as a potential area to add more, but we didn't get it in the morning. So we are unfolding we are trying to go above this 4-hour 2021 EMA, go back above the daily open, which is important. Then the next big step will be the daily pivot, the weekly open over there. And more important than everything now, after breaking here, we need to come back above the QOPC2 here, come back here, probably pull back from this pivot, but would like to see a respect of it on the pullback, and then we would have a continuation on the upside. We have some data this morning coming. So, yeah, we have some data, and the next one is at 9:30 CET, which is 8:30 GMT. In about 25 minutes, we have the German S&P Global Construction PMI. So it's giving us an indication about how is the building state, the real estate and the construction sector working, usually affected by recession coming. So we will see that soon. So it's nice. We start to see a little bit of momentum pumping in. We go to this chart. So we retest again the 78.60, 76.40 fib and try to go through it. So I will stop the recording because otherwise it will be a little bit long for the people that will look at it. But you understood if you are listening the recording video. We are looking for a potential breakup here, pull back to this 38.2, and then we want to see soon 106 here. This is one of the target we have. Inside target we have is this 106, 106.10 area that we want to be taken, and then we would look for the higher level up to the 108, which is the next important target we have after looking for 110, 112. Okay, so I stop the recording now. If you want to join the trading room, you have a free pass on Twitter that you can use. and you can spend 2 days in the trading room to see how it works and what we do here every day. So let me stop this recording.